Yo, what is going on, boys? Zoran Trades back with another banger, and today I'm gonna be coming back. Let me turn my camera on. Let me turn my camera big for this one. Today I'm going to be doing something for you guys that I wish I had when I was starting trading. This is the only video you guys are ever going to watch on fair value gaps, ever. You guys want me to watch another video? Trust me, I've looked up what is a fair value gap. Well, I'm going to answer every single question that you have, except inverse fair value gaps. I'm not going into detail with that, and I'm going to make a second video about that. This is going to be your only video that you need to watch about fair value gaps for pretty much the rest of your trading journey. You will always be able to come back to this video and expand on your knowledge. You don't need to keep searching it up and all of that. And without further ado, let's get into it. I've prepared something for you boys today. So, first thing first. What are fair value gaps and what are we using for? First things first, what's a fair value gap? A fair value gap is a pattern in price that occurs when price moves very sharply in one direction, and it's a 3-candle pattern, and I'm going to show you guys obviously exactly what the pattern looks like just now. But it's when there's a gap between the highest point of the first candle and the lowest point of the third candle. And with a bearish gap, it's vice versa. The gap, once you know what you're looking for, is very, very visible. It will never, very quickly, you will come to a point when it's not going to be a struggle to mark out a fair value gap whatsoever. So don't worry about that. Fair value gaps are a form of liquidity that is used to bring price higher or lower and bring price towards its targets. Let's just say we are bullish. We will use a bullish fair value gap to go low, take that, and then go higher, right? And vice versa with a bearish fair value gap. And I'm going to be going over today how we use them to determine bias, how we use them to find out where price is going to go next, and how we use them to get precise entries. And without further ado, let me get into this right here. This is what a fair value gap is going to look like. Exactly like this, right? See, we have a 3-candle pattern. 1, 2, 3 candles. And this gap between that high and that low, that's going to be your fair value gap. Same with the bearish fair value gap. That high and that low right there. Okay. So just so we can get a few things clear before we continue with this. In this, the high time frame fair value gap is going to be your daily fair value gaps, your 4-hour fair value gaps, your 1-hour fair value gaps, your 15-minute fair value gaps, and your 5-minute fair value gaps. And what's very interesting about this is that almost every trading concept, but specifically fair value gaps, work the same on every time frame, right? You're going to see 30-second fair value gaps work the same as 5-minute fair value gaps, etc., etc. They have different levels of strength regarding how much they're going to affect price, but they're ultimately going to follow the exact same trends and patterns, right? And the high time frame fair value gaps are the ones that we're going to use for direction, where the low time frame fair value gaps are the ones that we're going to use to get precise entries. And something that's notable, which you guys have probably seen here, the 5-minute fair value gap can be used for both, right? Because we can take trades out of it, but we can also wait for it to get disrespected for a more precise entry. So how does a fair value gap work? I'm going to just break this down, and I've got something here that I would like to show you guys to make this as simple as I possibly could. Okay? Within a market, any market, we are going to be moving. Let's just imagine it as simple as possible. Let's just say you are buying access to a group, a social group, because I have to use an example like this because we have to remember that trading is very speculation based, and it's a very emotional, and the psychology behind the emotions is very FOMO driven, meaning that if price is below a certain point, even though it's a low price, doesn't just mean that there's demand for it. A high price needs to create demand. So that's why I'm going to use this as an example. Let's just imagine we are buying access to, say, a mentorship program. Okay, right? this mentorship program costs $1.50. No one's really trying to buy this mentorship program, okay? Now, what happens? More people hear about it. Right? And now this person is trying to make more money who's selling the mentorship program. But they can't, they're obviously going to increase the price now because the demand has gone up for it. And between $1.50, I'm just going to make this like $150 so that it's a little bit easier to kind of gauge what's actually happening here. Right, okay. In between this point and this point, there's going to have been a price point where everyone was satisfied, right? The demand for it was high. Everyone was saying, okay, this price is continuously going up. This is something I want to be a part of. On top of that, the price was still low enough that a lot of people psychologically look at that number and go, okay, that's not too expensive for me. And on top of that, they, as I said, it hadn't reached a point yet where people are looking at this number and going, okay, shit, no, it's over. I'm not gonna pay this much for it. And there's gonna be a perfect zone in between. And on a chart, what that's gonna look like is going to be a fair value gap. And if you think about it, it's fair value. It's the most fair value. Down here, if you bought it down here, it was undervalued, right? Because, okay, technically you got your values worth later on, but at this point you didn't know that yet, so you were buying something that was undervalued, aka wasn't worth a lot. So down here it's undervalued. Up here it's overvalued, right? Because now we can see they weren't able to push it past this point, so now it stays down here. And at this point, once we are in this point in price and in time, we're gonna look back at the chart and we're going to see if there's a 3 candle pattern that looks like the one we just went over. That is going to be the zone where a combination of a high demand along with still a low enough price caused the strongest imbalance. Again, what I said, a lot of people wanted it, but the price was also still low enough that people were willing to pay in large amounts and buy it and flood into it, and that caused an imbalance, right? And what can we expect? The mentor owner, the course the course seller now, the mentor owner, whatever, the mentorship program owner that I'm using. What can we expect him to do now when he's posting on his story, opening up 2 spots for my course? No. What can we expect? He's going to bring it down to this price where he was able to make the most sales, aka where there was fair value, right? Because at some point, let's just say his Shopify or whatever, WAP notifications are going pa-doom, 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 pa-doom. At some point, at a certain price point, they went pa-doom, 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 because there was such a massive influx of people, such a huge volume of people coming and buying his mentorship. And that right there, precisely there, is the exact price point at which he's going to want to reduce his prices to, so that the same effect is had, and then he can reach new prices, right? Now we can start reaching prices. Now after that, he's established himself more, got more credibility, and there was a discount, and that is allowing him now to get 500, to start charging 500 or something like that. You feel me? And that is exactly how a fair value gap is going to look. Obviously, you don't need to keep this in mind every single time you mark out a fair value gap. You don't need to know, okay, yeah, this is the mentorship. But what you can do is, if you're trying to grasp the concept, this is very helpful. And then every time you go like this, in the back of your mind, you know, okay, bang, price comes here, we should use this and then go higher. And that is exactly what and how a fair value gap is going to look, and what the concept and, I guess, technicality behind it is. Now I'm going to get into how we use fair value gaps to determine bias and sentiment in the market. So if we see here, obviously we know price is going to use a fair value gap to go higher, right? So we're going to create the fair value gap there, and then we're going to come down use it, we're going to tap into it. We don't close through it, we tap into it, and then we use it to go higher, and then we use it to take out maybe new highs that we had made. Okay, and in this situation right here, we are moving, we are bullish. We're clearly making higher highs, higher lows, and on top of that, what are we doing? We are respecting bearish fair value gaps, meaning we aren't closing through them, and we're respecting bullish fair value gaps, meaning we aren't closing through them, and we are disrespecting bearish fair value gaps, meaning we are closing through them. See here, notice this is the highest point of the gap, we closed above there, right? And for my newer traders, I want you guys to re-watch that first part of the video and actually fully grasp what it is that I'm saying. First, let me actually make sure that this is recording. It should be. And I want you guys to fully grasp what it is that I'm saying, so that this part can also stick into your head, because it doesn't help going from video to video to video and getting all it. What actually helps you is understanding a perspective on it properly and seriously taking the time to understand what it is that you're doing, rather than getting it mentally almost masturbated to you to the point that it's like, oh shit, oh here's fair value gap, fair value gap, fair value, and then at some point in 6 months or a year, no, you could understand it today if you just lock in, bro. And now back to what I was saying. We are respecting this fair value gap and we're disrespecting this fair value gap, meaning we're closing above and below. This alone helps us understand exactly what's happening, because in a bullish market model, we are going to be disrespecting bearish fair value gaps and we're going to be respecting bullish fair value gaps. And it's the opposite in this case. Here you see we are respecting the bearish fair value gap and closing through the bullish fair value gap. And that alone is going to help us exactly to figure out what the market is doing, especially when we come back down here, especially on these higher time frames. When we see that the 4-hour fair value gaps are being used to go higher, the bullish ones are being used to get higher, and the 4-hour bearish fair value gaps are being closed through like they're not there, that is a very, very strong sign that we are going to be looking for longs on that day. And now, my boys, I'm going to be going into how we are going to use fair value gaps to get precise entries. Let me just get out the... Here we go. So now we know how a fair value gap works, how to spot it. We also know what it does and the different ways we can use it, right? So if you don't know those things, at this point you should go back into the video and really drill down, write down what it is that I said. Go back, revisit it, because now this is when we're going to start getting to putting it all together, okay? So as we know, a fair value gap is going to be used, in this case, a bullish fair value gap is going to be used to push price higher, okay? Let's just imagine, just so that people don't get confused, let's just imagine this is what price looked like here, right? Bang, 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 bang. Okay. Here's our fair value gap. We have tapped, we've came into here, and we have tapped and respected a bullish 4-hour fair value gap. That is going to be responsible for our move, and we know that after a bullish fair value gap gets tapped, we're going to be pushing higher on the 4-hour time frame. So that's likely to be quite a substantial move, probably up to these highs here, and then eventually up to these highs here, right? And that is going to be what we call a sponsor, which isn't too important right now, but that is basically going to be responsible for pushing our move higher, because we can see this is a strong reversal or price zone where price should push higher from, and that's going to be the first idea that we have, that we're actually trading in the right direction, and that's how we're going to use the fair value gap to see what price is actually doing. Then, zooming in a little bit, we're using fair value gaps here again for our trade idea, because obviously, I mean, I'm not a swing trader. I don't teach people to swing trade, so I'm not going to sit here and say you should wait for a 4-hour gap to get hit, wait for a 1-hour close out, run a 200 point stop, and then target the highs and wait 3 days for the trade. No, I'm not going to tell you that, right? But what I will tell you is that within knowing where price is going to go for a period of 3 to 4 hours, you can get your small piece of the pie. So I'm not going to base my whole trade idea off of, okay, sometimes I base my whole trade idea off of a 4-hour fair value gap, but for the time being, you guys can be basing your trade ideas off of a 5-minute fair value gap, meaning, what do I speculate price will do now? I speculate price swept this 4-hour gap, came higher. I believe now it will retrace into this 5-minute gap and then trade back into these highs here. That's what I would speculate price would do, and that is an entire trade idea that you have now gotten from a 5-minute fair value gap. So when you see a 5-minute fair value gap, you don't just enter, but you start speculating. Does this make sense? Yes, we're delivering out of a higher time frame 4-hour fair value gap. On top of that, we've tapped this 5-minute fair value gap here. And then the final step is our entry confirmation, being that we waited here for this 1-minute fair value gap to get closed above. You see, this is a bearish fair value gap, okay? So that means that after sweeping this, price could have used it to go lower. So what are we going to do? We can now wait until this gets disrespected, validating our trend of us being bullish. Remember what we said just now. When we are in a bullish market, we will be disrespecting bearish fair value gaps and respecting bullish fair value gaps, exactly like we have right here. We've disrespected this bearish fair value gap by closing above it, and we've respected this bullish fair value gap by holding within it and closing out of it, not through it, but back where we came from. And this now is going to give us confirmation that after at least sweeping this high, price is likely to deliver up until this high, and we will be right about that because we are in line with all the different time frames. And that right there is a trade idea, and that's a whole entire trade, and that's exactly how we can use fair value gaps for that. Again, I'm just going to say this one more time. First step was our 4-hour fair value gap. That is sponsoring our move. It's responsible for the fact that we are understanding that price is pushing in one direction for a solid period of time. After that, we have a 5-minute fair value gap here. That's our trade idea. I speculate price will use it to continue on a short-term level, right? And from there, to make sure that price is truly using it to continue, we just wait until a 1 or 2 or 3 or whatever minute fair value gap within the range that tapped your trading idea zone gets disrespected. Any fair value gap for now. Once you start taking this a little bit more seriously, you need to start getting a bit more techy with that. But for now, it's just any fair value gap because we are just focused on being on the right side of the trend. And from there, what do? We can go long or flip it around and have it opposite way. And if everything's aligned, we can go short. I'm going to show you guys an example of this now, but I would like you guys to go back to everything that I said because I literally just gave you guys an entire model right there based off of only fair value gaps. And I'm going to go into the market now and I'm going to show an example of this playing out. I'm just going to go to Friday. Yesterday was a bit of a not too great trade. Did play out, but Here we go. Okay. So let me go to here we go. First things first, let me check out the 4 hour. What do I see? We are delivering out of a 4 hour gap here and still delivering out of this 4 hour gap. Actually, no, we closed to that. But we're delivering out of a 4 hour fair value gap down here, and we've used it to go higher. After that, I'm going to see, okay, we are on top of that. Just generally, this isn't a checklist that you have to be following, but generally we are disrespecting bearish fair value gaps and respecting bullish fair value gaps. This gives me an idea that we're already bullish now, so I'm not going to try and fight the market. I'm just going to wait for a 5-minute bullish fair value gap, and I'm going to enter when we tap it. So let's see what happens here. Oh flip, I actually just went past my entire setup. Nice. Just give me a sec, boys, sorry about that. Here we go. So now what do I do? Wow. Okay, well, I'm just not going to play that in real time. I'll just show you guys what had happened. So here, what did we do? Traded into this 5-minute gap. After that, I go onto the 1 minute. Here, we used it, we tap the gap, we go higher. I could already go long, but I'm not going to do that. I'm going to wait until our fair value gap gets closed past, because see here, once we traded into it, we had a 2-minute fair value gap right there, and I want to see price close above it. Here we closed above it there. Now we can go long here. Stops below either stops here, but in this case that's a bit wide, so we're going to put them here. And yeah, so we can see smack. Could have held that until I think all-time high that was. But we see how we used that. We just used all the time frames. We used the 4 hour all the way down here. This was our thesis that price is moving higher and we're actually bullish. From there, we used this 5-minute fair value gap as our trade idea to go higher. And once respecting it, we waited for this 2-minute fair value gap here to get closed past, so that we could then be sure that price is truly ready to go higher, and then we went long. Exact same thing that we had marked out there. But yeah, boys, that's gonna be it from me today. I hope you guys come back to this and actually take in everything that I said, because there truly isn't anything more to fair value gaps than what I had just told you guys, except for the context, which is a whole nother part, and it's a whole nother video, because that goes into draw on liquidity. So I really hope that even if it's just one of you guys, this is your aha moment, this is your aha video. And yeah, boys, I really do appreciate every single one of you guys popping into these. Ooh, I hope my camera didn't take up too much space. Should be calm. Yeah, boys, I really do appreciate each and every single one of you boys who's been popping into these, and I'm gonna see you guys at the top soon.